Well, thanks very much, Alex. It's great to be here, and I'm looking forward to the next hour. I'm Laurie Schultz. I was the CEO of Galvanize for 10 years, up until April 30th. As you'd mentioned, we sold the business for $1 billion, which was about a 40x increase in valuation from when I joined. And today I'd be delighted to share with you that journey. I was invited by the founder actually 10 years ago to basically come in and break all the rules that he created in the first place in building our business and creating a category. We live in the governance, risk, and compliance space. And what our application does is it interrogates data to help customers mitigate fraud, corruption, and waste. And we are the leader in this $41 billion market.
And I have a feeling that market has expanded over the period since the company's founded.
Well, you know, when I joined 10 years ago, while we were owners of a segment of that market, we'd kind of pigeonholed ourselves in that we were exclusively committed to just auditors. And a big part of our transformation, as I'd said, a 40x increase in valuation, a 4x increase in revenue, was our ability to, from a product and go-to-market perspective, broaden the types of customers that we sold to beyond audit, and therein the types of solutions that we delivered as well.
So I'm going to let Lloyd take over this conversation, but before I go down, I have one question for both of you. How do you know each other, so people have some context of why you two are having this conversation?
So I'll add context there. I've been a big, long-standing fan of Laurie, running Traction, one of the largest communities for innovators. And after a fundraise, we had created a list of board members. And so Laurie was high on that list, but I did not know her. And our investors, Chris, who you know, Chris Livingston at Radiant Capital, he reached out, and then we collectively evangelized Laurie to join the board. But I think the question is, what excited Laurie to join our board?
Well, you know what? I was not aware of Boast.AI, and it's in my backyard. And when I was first exposed to the opportunity, I was curious, of course, about its total addressable market and the people, and of course, what's not to love about Lloyed. But in particular, I think that this is a very unique application. It's got a very compelling TAM, total addressable market, and I will do a major commercial on TAM for any founder on this call. It's fundamental to your success, and I love the business model. And so those three things combined for why I'm so excited to join the Boast board.
And it's
so I'm going to let.
I was saying it's sorry, go on.
No, go on. I was going to say, I'm going to get off stage and let you guys take the conversation and talk about how you know each other, and eventually continue what Laurie started with, the journey to $1 billion exit.
Definitely. Yeah, so it's folks, I'm the co-founder of Boast.AI. I hope everyone can hear me okay. Sorry for the technical difficulties. So yeah, the journey with Laurie has been phenomenal. For us, it was really important that a board member had run a company and scaled it to $1 billion and understood our space. And Laurie has a phenomenal background. So Laurie's background, over 25 years experience in software and technology, but more importantly, she was the SVP at Sage, she was VP at Intuit, she's had leadership positions at KPMG and TELUS, and Galvanize is in the space as well, right? They are a GRC, so governance and compliance software. And I think when Laurie joined the company 9.5 years ago, it was a services company. You turned it into a software SaaS company and sold it for $1 billion in cash. And then like a boss, you pieced out on a boat for 2 months. and Laurie's been extremely helpful to us. And we have like a bi-weekly call schedule. So every other Tuesday, we chat with each other. And I look forward to those conversations. When I think about who could I work for if I ever wanted a job, Laurie would be at the top of that list. And so it's great to have people. It's great to have people on your side that you respect and that you would want to listen to, and who's been an operator. So I think my fundamental feedback for anyone here is, if you want to bring a board member, make sure that they have been through the journey a couple of times where you want to go to, and you respect them. And it's funny, we've known each other for only a few months, but it feels like I've known Laurie for a number of years.
Likewise.
Awesome, Laurie. So, but your background, walk us through your journey. You started in accounting, right? You were an accountant, or I have that wrong?
Actually, I had a marketing and finance background, and I just so happened to get a job at TELUS, and I launched Culling Line ID back in 1989, before most people on this phone were born, and that was my exposure to technology. At the time, it was a very sensitive media privacy related business, and kind of put me on the ground working with technical engineers. And I never looked back. I moved to Intuit, to Sage, and to Galvanize. And over the course of a 30-year career, I've run 12 software businesses. So really, really awesome to try to find places that I can add value to a great business like yours, Lloyd.
Yeah, and I often keep confusing that you have an accounting background because you know finance better than most CFOs I've met. How is that? Tell us that.
I'm just predisposed to it. One thing I find very, very rare, and I always kind of look for this in my employee base, for example, is like the rare person that can put a price tag on an idea. If they're a product manager, if they're a marketer. Yeah, I'd say in my experience, maybe less than 5% of employees have the ability, and maybe more importantly, the confidence to put themselves out there and put some math. And I've always been predisposed to that. I've always used that my entire career. And I guess I've just had a lot of practice in the finance world as a result.
Definitely. So, you've got this great journey. It's like you planned this 10-step to building a $1 billion company. It's like when you joined, you had planned this. Can you, before we dive into that, I'm curious what experience you felt you could draw on coming from Sage and Intuit that helped you map that out? Like, how did you feel so confident?
I think, I'll say it in a moment here, I think one of the most important skills a leader needs to have is change management. To convince people to do something against their better instinct, to get them to change what they've done. In some cases, that formula successfully in the past. That's what I learned at Sage, actually. I joined Sage, I was running one ERP product called ACPAC, and when I left, I had 7 of them. And all 7, when I got them, thought they were the best, and I had to kind of mash them together, put them under one brand, and it might sound very Navy-like, Lloyd, but we really had to create some economies of scale by kind of leveraging the best in the practice. And that was really hard. Not everybody won. Not everybody was the top of the food chain in that exercise. And a great learning for me was just to try and learn how to drive change in an organization.
Definitely, and we'll get into that. How do you get good at change management? But first, I want to share. Laurie and I often joke about this concept of pirates and navies. Startups are often like pirates. We do whatever it can to hit the end goal, but there comes a time in your life where you have to graduate from being a pirate and like just trying to win at any cost and sort of try everything, to becoming more like a navy, because ultimately pirates get loot and navies conquer worlds. And so my pitch to Laurie was, we need you to help us become the navy. And more like when Laurie joined Galvanize, it was a 40-year-old services company. She had to change them into a pirate and then turn them into a navy before getting into the $1 billion exit. But let's answer that question, actually. How does one get good at change management? And then let's dive into the 10 fundamentals.
There's a couple of fundamentals to change management, not to make it oversimplified, but you have to get in the hallways, you have to talk to people, and you have to be relatable. I'm sure no one on this call is kind of an in the office with the door shut type leader. People want to follow people that they like. People want to follow people that are human, that have made mistakes. And, the single biggest thing that I've used to drive change is just kind of a, monthly town hall, accessible CEO. I don't sit in an office. I have a cubicle. I wear my Lululemons to Safeway on Saturday. I'm very relatable as a leader. And as a result, people feel comfortable talking to me. And, we focus very, very much on culture and, kind of that type of accessible leadership, number one. Number two, if you're starting to get stuck, when I joined Galvanize, we were already 25 years old. If you can imagine that in dog years, that made us like over 200 years or something like that. We were stuck. Like we'd fallen victim to continuing to do everything that had made us successful in the beginning, and those things weren't working any longer. And so one thing I've done is create a case for change. And, borrowing on the finance modeling, you can model out status quo and you can draw a picture of what 5 years looks from now. And that can often be a very, very sobering catalyst to get people off of kind of the treadmill and to convince them to do something differently.
Definitely. And so let's dive in, right? So here, when you joined Galvanize, you're effectively taking over as CEO. So the first step was this founder transition. Tell us all about that, because that's a very hard thing. Once you're at scale, sometimes the founder CEO is maybe not the right CEO for the company for the next level, or maybe they might be burnt out. And these guys probably were a combination of the two. They've run this company for 40 years. What made you join that company, and what did you have it in mind that I'm going to take this company in the next few years and turn it into SaaS? And did you have that all in your head? Like, how did you come in and manage that sort of founder to CEO, new CEO transition?
Well, there's a lot to unpack there. If I reflect just from my own point of view, I'd say that, when a company gets around the 15 to $20 million range and led by a founder, that's the time for the founder to consider, organizationally what they can do to drive further change. I mean, it could be getting a board. I've been on boards where founders, aren't necessarily leveraging things like a board chair, necessarily leveraging the board to help them achieve their goals. And certainly there's many software companies that don't even have a board. So that's number one. Number two, to state the obvious, founders need to stop trying to do everything on their own and bring in a leadership team that's been there and done that. And that, as you know, Lloyd, I know you're doing that right now. That can be tough, right? Is passing the baton to somebody that maybe actually can't even do it as good as you, because you have to give them the opportunity to learn in order to scale. In my situation at Galvanize, the founder actually, an incredible leader, stepped into the board role. He actually got out of the business, and that takes a lot of courage and humility to do. He authentically gave me the baton to break all the rules he created in the first place. And, that was a big ask for me. I'll tell you this, most employees at Galvanize at the time, and many in the tech scene in Vancouver, had bets on how long before I either quit or got fired. And, it speaks to how rare a founder CEO transition typically happens, especially when the founder is the one initiating it. So in our case, it worked. It worked because Harold was very authentic, and we worked like crazy to make sure that we were aligned in our values, and that we were, kind of focused on the same destination.
Definitely. And so what was one of the first things you did? You talk a lot about town halls, change agents. Like, one of our biggest challenges is we were bootstrapped, sub 30 people, got to 8 figures with that. And then we raised this money. We did the Series A. We brought on a whole bunch of key execs. I went from running products and marketing, which was no marketing, just running a big community, and 4 salespeople to now we have a CTO, we have a CMO, we have a big team. And I sometimes wonder, what do I do? Like, what now that we've scaled, we're 95 people right now. And I wonder, like, what do I do? But one of the most important things is when you're growing, there's a lot of people who are stuck in their old way of doing things. Like, how do you manage that scale? You come in as a CEO, and I'm asking it from a perspective of a founder also, right? Whether you bring on a new CEO or not, as a founder going from a bootstrap company to a venture-backed company and adding 60, 70 people in like 5-6 months, you got to become a new founder. So how did you manage that going into Galvanize? Let
me think about this address this from 3 perspectives. I focused on three internal audiences, and I probably spend 50% of my time communicating. You think about that, that's 2.5 days a week. It's an enormous commitment. And I focused on employees, monthly town halls, weekly CEO Slack messages, very, very transparent leadership. From maybe a founder to who just got investment to your situation, Lloyd, I also spent a ton of time building a strong leadership team. We had this one pager that talked about leadership expectations, and one of our anchor statements was SLT is first team, senior leadership team is first team, meaning when you were at a meeting that was SLT, your commitment was to your peers, not actually to the department that you led. That was a pretty big culture breaker for us. And I'll just say this thirdly, we brought on investment in 2017. That was like 30 years after we were born. So we bootstrapped our way all up until then. And as you know, managing a board with investors on it, that takes a lot of work. We worked really hard to make sure we had a values, an evaluation, and a vision aligned investor. And I spent a considerable amount of time making sure we continued to be aligned. Were we aligned on our exit strategy? Were we clear on our exit strategy? Did we prefer sale to a strategic or going public? On a financial dimension, was everybody aligned on a growth agenda, or was it more of a hybrid growth and profit? Those are obvious things to say, but when you're managing a dynamic with the board, it's really, really critical that you've got transparency and clarity and alignment on those topics.
Definitely. And then when you joined, right, because you say it's a 30-year-old company, but when you joined, effectively, you changed the direction of the company in ways. You took you turned it into a SaaS company. And so in many ways, you're refounding the company. Mm-hmm. And people who are used to doing things a certain way. You talked a lot about like town halls and change agents with us. How did you identify who are the people to take you on this trajectory to $1 billion? Like it all starts with people, right?
Yeah. Well, I remember when I joined, we were just shy of 200 people, and I kind of made this up, but it was like there was a ping pong game going on at the company. There was the people that were willing to change, and then there were the people that were not willing to change. Let's call it a third each. And they were battling each other. They were not aligned. And then you had a third of the employee population sitting in the middle, watching the ping pong match, trying to figure out what side they were on. And it was a very, very destructive situation. And it started with leadership, and not to be too gentle about it, but I took the leadership team out in the first year. We just did not have the right chemistry there, and that was breathing its way down into our organization. And so I talked a lot about that, a third, and trying to swing as much of the leadership team and employees over to that group that was willing to drive change. Now, how do you come up with the playbook of change? Again, not to oversimplify this, but town halls was a significant part of creating a culture where people would put their ideas forward. Some of them stupid, some of them great. And if you listen hard enough, not only are you going to get great ideas, because people are smart, you are more importantly going to be able to spot in the crowd, the back of the room, the person that has got integrity of intent, who's got a great idea, and who everybody else watches. And that actually is a huge part of how we drove change at Galvanize. We called those change agents, kind of like a top talent program, to be honest with you. And we put those people in charge, whether it was in an organized, maybe role, or whether it was of certain projects. And that change agent program became very public and visible, and people wanted to be change agents, and it bred this bravery that helped us drive our unicorn outcome.
And those change agents are not necessarily always your oldest employee. I made a very controversial statement on LinkedIn recently, and I got some flack for it. I said, if you keep promoting people on tenure versus trajectory, you become the very thing you set out to disrupt, maybe the government.
That's such a good point. So our change agent, that concept born in the very first town hall I did on my second day, that transitioned into kind of over and above town halls, an organized program. So every year we launched that year's change agents. These were the 10 to 15% of our employees who were both great performers, but also had potential the most potential to drive our vision. And we published this list. And I spent, quarterly strategic workshops with these folks. I spent one-on-one time in terms of trying to understand their career aspirations. And, I remember asking other CEOs and even my board, have you ever heard of a public top talent program? And nobody had ever done it. And I thought, well, that's stupid. Why wouldn't you communicate to everybody what amazing looks like? Why wouldn't this just be a badge of honor? And so this public top talent program, public change agent program, again, was something that kind of bred our transformation. And just to actually make the point there, it was without tenure. It was untitled. In fact, I'll admit, I went out of my way to look for somebody that was kind of new and green. And so we did, try to have kind of a diversity envelope when we built those groups.
Definitely. And Alex asks here, how do you get the same benefit from a town hall in a remote distributed environment? You probably had to battle some of that because the last leg and probably the most difficult leg when you were deciding, should we IPO? Should we take more investment? Should we exit? Probably all of that was happening in a distributed world, right?
Oh, yeah, it is definitely. I mean, let's just all be clear. It's harder to do this remote, that kind of thing. And certainly, if I reflect, because we had such a baseline and we were so face-to-face and we built this culture in a lot of face-to-face town halls, when you meet somebody then subsequent in a town hall and it's through Zoom, you already have that muscle built. So the communication was strong. Having said that, we did do our town halls remotely, and to state the obvious, we had to supplement that with tools like Slack. I mean, we were maniacal users of Slack. It's like a great surrogate for a hallway conversation, and so we as leaders were very, very accessible through that, and through crises, things like COVID and maybe other examples of crises. There's many. Actually end up writing a daily CEO post. And back to some of my earlier comments, you can talk about the business stuff, surely. But I think it's really important to talk about personal stuff as well. With COVID, we went through together, regardless of position, personal stuff as well. And so trying to be very relatable, even if it's done through a tool like Slack or a Zoom town hall, you could still connect with people if you could somehow find a way to be human and real about it.
Yeah, definitely. And that's what we've found as well. The thing is, Boast has been a remote first company. And I feel like, yes, we're, the medium of Zoom or venue gives you two senses, right? Sound and sight. But anytime you try to incorporate more than two senses, taste, touch, and smell, you end up building more genuine bonds. So we do things like offsites in different cities. We do conferences, so we meet around that. And also sometimes, ship people food and drink so during the calls. But, one thing was touched on, which is really important, the job of the leaders is to communicate, right? Like clearly articulating and communicating your vision to excite, inspire, and motivate people is probably one of the most important skills to have. And it's not a one and done activity, like you've said, right? You've been doing it day in, day out, because when people are excited, inspired, and motivated, they can move mountains. And so I think communication is a very, very huge part. And most leaders I talk to say the same thing. The concept of change agents you advised us on is something we've tried to recently implement. We created a group called the Boast Avengers, and we found people in the company that may or may not be new, but they just had a lot of context, more importantly, trajectory. What I've realized through our conversations, Laurie, is that a company that's on a hyper-growth trajectory, it becomes a different company every 6 to 12 months. Mm-hmm. Last December, we were a different company than we are right now. We're growing to 125. I don't know half the people in the company. And so, when you're a bootstrap company, you're always looking at how to react to situations. Okay, we sign clients, now we got to fill like product or CS or whatever. But when you're when you're moving hyper growth, you're thinking about what is a company I should build for end of next year today. And the people you need there, I feel, are people who are high trajectory. They may not have the experience, but they have trajectory thinking. They look at problems and they're like, you know what, this is how the company, these are the things we need to do today to get to where we are next year. Versus, it's a concept of people saying, build me a faster horse, versus people saying, no, we need to actually build a Ferrari. Right?
Exactly.
And that's your advice that we took and we instituted very recently.
Well, and if folks here are doing things like regular employee surveys and stuff like that, if you're like us, the one area we would get negative feedback on was pace of change. Everything is, it's always moving, like you said, every 6 to 12 months. And I mean, the reality is that was the reality. And for the transformation agenda we had, there was no 9 to 5. It wasn't particularly balanced, just to be completely honest. But we were clear about that for people that joined us. And, it speaks to making sure people know what they're getting into and then not apologizing for it. Because, if you want $1 billion unicorn outcome, it's hard work. And you need people that have got that appetite and that curiosity and kind of the relentless, desire to, drive change and to lead their peers through change.
Definitely. And that's why so much of this is people. You've advised us a ton on like people is the top focus at the equation. Build, inspire, and motivate a team. If you treat your people with love, they'll treat your business with love. And the outcome will follow. And that's a lot of what we learned from you. Now, you talk a lot about TAM, right? And every time we meet, you have two consistent themes, TAM and moat. So let's dive into the TAM. How do you craft a compelling picture of your TAM? I mean, probably when Galvanize started, it was a smaller TAM, and then you guys painted a picture of a $41 billion TAM.
Yeah.
Walk us through that and why that is important, through M&A and everything else, but even like building your company and your roadmap.
We had 2 pieces of paper at Galvanize that drove everything. One was our 1-page strategic plan, maybe chat a little bit about that, and the other was our TAM. Now, when I joined, we had flatlined. Our culture wasn't good. Our technology was old. We weren't growing. And we had pigeonholed ourselves. We were an audit analytics company. We owned the space. We created the category. We helped people stop fraud, corruption, and waste, but we were only selling to auditors. And so the success of building and creating dominant market share in that was our biggest liability, because we were afraid of kind of breaking out of the sandbox. And so I remember early boasting about our TAM then, and it was, about $1 billion. And I thought that was pretty big. And the person I was talking to just kind of laughed at me and said, that's not very interesting. And it took courage and creativity to build a credible view of a $41 billion total addressable market. And what that enveloped for us was looking at how we move from selling just a point solution to a platform. How do you deal with the entire governance, risk, and compliance suite? And also even more tricky was, how do we move beyond auditor? How do we talk to a CFO? How do we talk to a chief information officer? How do we talk to general counsel? How do we talk to CEO? How do we talk to boards? The reality is we didn't know how to talk to different buyers. And so consider those 2 dimensions. We sized the share of wallet that different buyers had, and we sized the different solutions that we sold, and we looked at the intercept. And what that allowed us to do was figure out what we were going to build versus buy. It informed our M&A strategy and our R&D investment, and it also significantly informed kind of our go-to-market roadmap. How do we evolve our brand across buyers? How do we sales enable people to speak the multiple dialects of the different buyers that we were looking at? Just for bonus points, we also cut our TAM by geography. When is the right time to move into different markets, and what kind of go-to-market model do you need to be effective there? So that TAM for us, we built it in 2014, and we use it today religiously. It fundamentally put us on the map. We presented it to investors, of course, to our board and to our employees alike. And it was compelling, it was original, and it was significantly informative in terms of how we were spending our time and our money.
Awesome. And you know, a lot of founders, and Alex will attest to this, for them, TAM is the three bubbles on the TAM slide in the pitch deck, and then never additional thought, or in most cases, not additional thought. Most founders I talk to, right? What I mean, I think you gave us the what made you go and do this deliberate exercise on TAM, but
A little bit more, who was kind of the creator of this TAM. He drew on as many analyst reports as he could get, and we had 6,000 customers, so we could in part use kind of the profile of our own base to build this kind of original view of the market. There was no template, there was no book. We created this space, and you know, perhaps coming up with the picture of it at the beginning was easy. What was harder was to create believability about it. And so our follow through on that TAM, you know, here's the buyer, here's the product suite, here's where we're going to invest this year, here's where we're going to acquire. For us to rinse and repeat that, you know, every second conversation at the board, every second conversation with investor, for us to continue to use that over time, people could see our execution against it. We said what we were going to do, and then we did what we said. And we had investors that would, you know, seek out that view of the TAM. We often got comments, you know, they'd never seen anything like it. And again, I'm probably over commercializing this. It was a huge part of our $1 billion outcome, because it showed both the enormity of the opportunity, number one, back to the moat comment. It described why we were in a unique position to deliver it. And three, because we had follow through on it, we had credibility that we could execute against it.
Definitely. And then moving on here, you said the second most important piece of paper was your one-page strategic plan. Mm-hmm. Walk us through it. Why should every business have it? And what are the key elements of a one-page strategic plan?
So you remember maybe in the job you had before the current one that you're in right now, and you used to walk past the poster by the elevator and had your values, vision, and mission. And the mission statement was about 500 words long, and they were boring as hell. That was my experience, I hate to say, before Galvanize. Values, vision, mission, they weren't meaningful for me. They were too many words. I wasn't given any authorship in creating them. They weren't emotive for me. At Galvanize, that was different. We cared a ton about our values, vision, and mission. We got in the hallways. I remember we built our one-page strat plan in 2014, so 3 years after I joined. And to be honest, to retire the incumbent values and put 3 new values out, I kind of needed to earn the right to do that. So we anchored on core values as authored by employees. And with the help of our TAM, we created this beautiful, meaningful, self-actualized picture of our destination. And we were able to get people's heads and hearts lined up against this one-page strat plan. So it captured our values, vision, and mission. It captured a statement on what was our distinctive competitive asset in the space. And it actually had at the bottom 3 strategic priorities, which were more annual in nature and focused in order on employee, then customer, then shareholder. The act of how we built that was how we created ownership of it. And the fact that I used that one-page strat plan in every single kind of formal presentation I did with employees, even if it, you know, they couldn't stand seeing it again, emphasized how much I was using it to drive the business.
And in those buckets, employee, customer, shareholder, I love that order, because without people, you have no customers. and without customers, you're going to have no shareholders.
Right. That's exactly right.
And so what was in those buckets? I mean, maybe you can walk us through the most recent one, or maybe the initial one in under employee, customer, and shareholder.
So our first under employee, it was called Mobilize Talent. And when I was hired, as I'd mentioned, I was hired to fix culture. We actually had one metric for that, but we had many. But the one most important that we used my entire 10 years was employee net promoter score. So many folks are accustomed to using net promoter score for customers on a scale of 0 to 10. How likely are you to recommend? We use that for employees, and depending on the year, we did the survey either twice or we did it even quarterly, and we published that, and we interacted with that survey, and we were very, very religious around growing our score. When we first did it, we were 0 NPS, and I think our peak was around 72. And so that said a lot. And it said a lot because as a leadership team, it was clear we cared so much about it. And because of the culture of transparency, I mean, people gave us a shit. And of course, because we acted on that, we gained credibility in this tool. On the customer front, the label there was disrupt the category. And for us, one thing that's hard, I think, for someone like me coming in and taking the reins from a founder in an incumbent business is I had to unstick it. And so a lot of what I had to focus on initially with the customer bucket was kind of growth in the strategic parts of our business and the customer experience there, and not let that get whitewashed with parts of the business that I was exiting. So for example, let's say customer NPS is a metric there. I had to separate the kernel from the chaff. I had to focus on, what's the level of engagement of the customers that are part of our strategic future. And, it'll sound bad. I was less focused on customers that weren't going to be part of moving forward in that journey with us. That was really, really hard for us because it sent a mixed message. Well, you love customers so much, but I guess you only love certain kinds of customers. And the reality is that was true. For us, the third pillar around shareholder, we labeled it transform the business model. And one thing about us, when I joined, we were on premise, we were perpetual, Lloyed, as you mentioned, we were consulting, 47% consulting. Well, we transitioned our business model to subscription and to true multi-tenant cloud. We're 89% recurring revenue today, so by default, only 11% consulting. And, a big focus for us was to move 100% of 6,000 customers to subscription. That was a crazy thing to do financially, but it colored the business model transformation agenda. And you know what, to be honest, that's a hard thing to do, especially when you have investors in your mix. We chose to do it before we brought on investment because we had to tank our P&L for basically 2.5 years before we saw the payoff of compound growth on a subscription model. So
only a visionary could do that. I want to dive into this ENPS. I'm personally very passionate about people. All my life is driven by people. And Laurie said in at the end, you guys were over 70% ENPS. I just want to share, Salesforce and Adobe are two of the top employee experience, top companies in terms of employee happiness. And Adobe's ENPS is 57 last time, and published ENPS from Salesforce is 58. So You've done a fantastic job there. One question before we move on to moats, because I really want you to talk about your view on moats and why it's important. Do these ENPS surveys need to be anonymous? What's your view there?
If you have, yes, they do. We used a tool called WorkTango, and it was excellent because it did all the math, but it also actually had an interactive capability where if employees, gave you qualitative feedback as leaders, you could go in and you could read them, and it only publish stuff. You wouldn't get results if it was below a certain sample size, but you could interact even anonymously, and often on a very sensitive issue. Doing that, the person would come out, and you would build trust through that tool. So, I'd say for us, 90% of the time, people were just fine telling us who they were because we created that culture. But, 10% of the time they weren't. And so anonymity, I believe, is still very critical.
Definitely. Awesome. Laurie, the other thing we talk about a lot is moats. Every time we talk, it's your favorite word. Tell us about moats. What do you see as being valuable moats for companies growing into this next sort of decade here?
You know, sometimes when describing a moat in one sentence can be anticlimactic because you want it to sound bigger than it is. When we updated our one-page strat plan, it was only one other time. This was the biggest subject for debate. So what is it that you uniquely provide that, you know, personifies you as a scarce asset that both customers will buy into and certainly investors will buy into? For us, our formula was around things like true multi-tenant cloud. In our space, there's a lot of bullshit cloud, not true multi-tenant cloud. Our emphasis was on platform over point. You think about trying to present risks to your board, and you're trying to do that by, you know, cobbling together a whole bunch of independent risks. You're not going to really have objectivity in that conversation. For us, our moat was around global scale. We were the only one in our space with sales in 130 countries. Whatever it is for you, you know, it's important that the organization has a common opinion on what it is that's distinct about you. And once you figure that out, you know, the trick is to maintain your lead. And, you know, I'll give you another example. Our chief revenue officer was from Avalara, and they have a great, you know, example of a moat in that their sales tax or their tax compliance tool is embedded in most of the major ERPs around the world. Talk about a moat. Somebody that wants to kind of take a run at that business, they're not trying to upstage them just on a direct sales model. They're going to have to try and get all of these, you know, global ERP vendors to change who they're married to. It's you know, it was an excellent example of a moat.
Awesome. Alex, perhaps you're a VC, so feel free to drop in your favorite moats in the chat and we can have a talk about it. Tanya asks, how do you build a moat that strengthens your market share without painting yourself into a corner?
Well, let me take a run at answering that question. When we first talked about our moats, it was around, I didn't mention, beautiful design, easy to use, true multi-tenant cloud, and platform over point. Yeah, I realize that's just galvanized gobbledygook language. But in doing so, we actually had to say no to a lot of business. Imagine 10 years ago telling auditors and risk professionals that they can only buy a true multi-tenant cloud solution, and all of the wait, we don't do that. And we just said, well, we're not doing business with you. It's a bit of a risk, but you know, once you've kind of got religion around your moat, make sure you have religion about your execution against it. Because if you get tempted by large revenue opportunities that are off strategy, your moat's not going to be credible.
Awesome. And you guys have this heat map. There's another concept you talk about, the $1 billion heat map. What goes into that heat map? What were the key elements, drivers along the way?
Yeah, $1 billion heat map. That's a great thing to try and do. It was a keep ourselves honest about what we still need to focus on en route to a $1 billion outcome. And I remember building it, built it with our leadership team, built it with the change agents, and then ran it with the board. So I'm trying to, you know, play dispatch and get alignment. We probably had some 40 different metrics at the beginning, and we consolidated it down to 12. Key thing is that it's diverse. I mean, there's going to be the obvious financial metrics. Don't let it be 80% financial. You know, pick your 2 or 3 financial metrics. Maybe it's rule of 50, for example, or maybe it's net retention. You know, whatever your favorite metrics are, those should be easy. The hard thing there will be to pick. We pointed at a couple of other things, the caliber of the C-suite and the diversity of our board. Not just were they diverse from a gender or, you know, that type of profile, but did they have publicly traded company experience, for example? We had metrics around a product that would capture win-loss with certain segments that were strategic, for example. We also measured accessible TAM. So this $41 billion TAM, our platform, by the time we sold, didn't deliver all, against the full $41 billion capability. Every year, though, we would grab another 3 million or 5 million based on either what we built or we bought. So we had an accessible TAM metric in there. And so the key thing, is to have one. We had these metrics projected out 3 years. We had valuation ranges around it. We had red, green, yellow. And I presented kind of a status of this $1 billion heat map in the monthly financial memo and the quarterly board reports. And that was tough because, we weren't great at everything. But at least I had kind of alignment on what we needed to get great at, up, down, and across the organization. And it was really, really helpful. I built that, by the way, with an independent on my board. Back to some of your opening comments, Lloyd. If you've got a board member that's been there, done it, that that you can work with on something like that, it can be a really impactful tool to use.
Definitely. And as you were building this company to $1 billion, who are the 3 key people that you probably wouldn't have gotten without, and how should the audience here look for those people, kind of thing?
2 or 3 people to creating $1 billion. Wow, that's an interesting question.
There were lots of people, but I think who were some of the key drivers to help you? Because as a founder or a CEO, you're alone, right? Who do you talk to? Who do you bounce ideas off of? Your board is not with you day in, day out. Who are those 2 or 3 people?
Okay, well, for me, I'd say the chemistry I had with the founder was really, really critical. He and I, over the years, that we did an initial raise in 2017, and then we sold in 2021. He and I were out on the streets, actually, and 50% of my communication, my time internally communicating, was supplemented with a bunch of time, call it 25% of my time, with the founder, building relationships with investors. And a great piece of advice I think about the timing of a raise is to do it when you don't need it. And if you have relationships with investors you respect in the queue, and values and vision alignment was always key for us, then you can draw on those relationships when you are ready for investment. So the chemistry that Harold and I had, the founder and I had, in building relationships with founders that really appreciated how hard what we were doing was, and who were able to see kind of the before and after, was high impact for our outcome. And since you asked for a third, I had an amazing strategic product officer who was the author of the TAM, who had domain, actually, and was able to, in a way I couldn't, bring kind of the customer piece along for the ride. So that combination created a ton of credibility for us as we had our kind of investment discussions really mobilized in this past year.
Definitely. And in your 10-step plan that we talked about through this conversation, courting investors at the end, a lot of what you talked about was invest in people, have the right people in the right seats, talk about finding high trajectory people. You talked about processes and having a big TAM and really putting the framework in place. And the investors or courting investors is at the end there. So tell us a little bit more about your process of courting investors. Also, you said that you guys didn't raise money until, 2017, right?
Yeah.
And it was from Norway. It wasn't a big amount of money, like we're seeing hundreds of millions of dollars this way. I think you guys raised 50 or 70 million, something.
Yeah, we raised 50 million with Norwest. It was a minority investment in 2017. And so as we were incorporated in 87. So pretty good run, bootstrapped. And we spent time thinking about control of our business. And then of course, when we brought in investment, we didn't want assholes sitting at our table. We wanted people that we could learn from, who are truly invited guests and great partners. And that's what we got. In the past year, And I didn't expect to do this, but so it's something that I learned how to do, and I hope to be able to do it again. Because we had so much inbound, we got organized, and my board was really, really helpful for me. And it was my responsibility to create choice. And we actually thought we were going to go public. And in the end of the day, we sold to a strategic. And so we, in kind of the last 9 months that I was at Galvanize, we had 3 tracks of organized conversation. And I reviewed these every second week or so with my board. We had about 5 investment bankers we were talking to. Evercore ultimately helped us with our transaction. They were fantastic. And we used them to keep us honest about our IPO agenda. We gave them a look under the hood, and we took their advice. And as a result, we created some evangelists in the investment banker crowd. Door number 2, we, on a very selective basis, queued up conversations with 10 to 15 private equity organizations. We got to know them. We looked for, kind of compatibility of agendas. And on the 3rd track, on a very selective basis, we talked to a few named strategics. And as you can imagine, these plates on sticks, I mean, at the end of the day, I probably had like 20 conversations going. And it's not just a one-time thing, as you know, Lloyd. Then they want to meet with you every 3 months. And so it was crazy. But in those conversations, we created scarcity value. People got to know us. And, we knew where our warts were at the same time. So we had time to kind of double down and address those issues. And that put us in a great position to queue a competitive process in December, which culminated in our transaction. But, we proacted who we wanted to have the conversations with. We didn't just respond to inbound.
Definitely. And, Laurie, you have such great brand value that many of the growth equity and private equity and VCs that know you very well reached out to us because as a function of you being on our board, and everyone seems to know you well. To sort of bring this all together, I know you don't like the word playbook, but you did have a playbook, right? What were some of the 6 or 5, 6 things that you would say were key to this ultimate playbook that led to a big exit?
I hate to admit I had a playbook and I didn't even know I had one. But if I look back, I wish somebody would have just given this to me. And so 5 or 6 things: culture, technology. Obviously, I talked a lot about culture. We transitioned our business to true multi-tenant cloud business model. With the backdrop of those 2 things, we asked 6,000 customers in 130 countries to change how they paid us. And then we rebranded our company. We used to be ACL. You may have known us as that. And we rebranded to Galvanize. And we did that actually coincident with an acquisition. By the way, if you ever do a rebrand, try to do it with an acquisition, because the coincidence of those 2 things almost gave us instant credibility beyond audit. We were immediately credible in kind of the cyber risk management space with chief information officers. So, of anything, those 5 things stand out the most. And, it's simple to say 5 words. Those were major transformations, each one of them in and of themselves. But those are the 5 things that we focused on to get our outcome.
So culture, technology, business model, global GTM, and brand. Alex has a, what is that? Sorry, and the M&A. So a couple of questions here. How did you know it was time to sell the business? You could have IPO'd. How did you know it was time to sell the business?
It's hard. I didn't want to sell the business. And it was a long shot. We talked to just a few select strategics. And here's the thing. In the governance risk compliance space, and if you think about auditors who remain one of our anchor tenants, unfortunately, these professionals don't have the audience that they really need at the board. Bring in Diligent, the company that acquired Galvanize. They're on the iPads of 700,000 of the world's most influential leaders, be it board directors and such. And the customer value proposition was just too good for us to walk away. It was a fast forward on our ability to get our customers into a position where they could have high impact And, that was the main reason that we acted before we thought we would. And in a way we thought we wouldn't. So what's incredible now is to see how that transaction has transformed the lives of employees. And, what we've done by virtue of this is we've incubated this next generation of leaders into the tech scene who've gone through this crazy transformation and now have, built some muscle around what it takes to be able to drive a change agenda on kind of that formula of culture, technology, business model, M&A, and brand.
Awesome. And Ross here asks, how did you personally or as a leadership team keep going on the change of billing model to 6,000 clients? That's crazy. And you sank 2.5 years of P&L to make that happen. Did you ever worry, like at some point, like this is not going to work? That's a massive bet. Right?
Yeah. Well, we were crazy, and maybe we did it so with such certainty because we didn't know what we were doing. I like to describe it as being pregnant. The first year was like being in the first trimester. We were amazed. It was actually easier than we thought to get customers to sign up. Of course, we deferred a bunch of revenues. And so year 2 was like being the second trimester. I mean, there's no getting out of it. And the problem is we didn't know how to count our success. We actually didn't even know if we were successful. It's like you had to create belief in something nobody could see. So we looked for, different ways to predict whether customers would continue to retain their solution. We looked at their actual consumption of our technology. And from a financial perspective, I had to train my board and leadership team actually how to hang out in the balance sheet, not in the P&L. This is crazy. And it's where you have to have a lot of credibility as a leader, like I said, because you're trying to create belief around something people can't yet see. And you're pot committed. I mean, there's no going back. By year 3, we had all of the right signals, and this was the greatest move that we ever made because the compound lift from a recurring business model was obviously high impact for us.
We're at the top of the hour. I think this is a great note to end on. First, they ignore you, then they call you crazy, then they fight you, and then you win. You win $1 billion. Laurie, what a great pleasure. I wish actually I was working for you at Galvanize at the time. It's just so phenomenal to just learn. Every time we talk, although we talk so frequently, I learn more. Thank you so much. Well, Alex, thanks for having me and having us.
Guys, thank you so much for this conversation. I want to listen to you guys for like another 2 to 3 hours. I think the amount of knowledge per minute is just incredible. I'm so glad we got this recorded and we'll have a transcript because I think I'll read it 2 to 3 times myself. Thank you so much. Lloyd, you're a lucky man to have Laurie on your board and to be available to text or call away. So thank you so much for speaking with the community and sharing your knowledge. I hope to have follow-up conversations with both of you.
Awesome.
I do as well. Thanks so much, everybody. Have an awesome day.